Today is Tuesday, April the 21st, and this is a supplemental video just looking at some of the stocks that we've been looking at recently. Hertz, TAST, which is the restaurant company that manages a lot of Burger Kings, APT, and then BP, and you couldn't look at BP without looking at Exxon as well. So let's start with BP. Oil has taken a beating. Is there any possibility that these oil companies can make any money? I don't think so. But look at today. Let's take a look at the volume, first of all. And the volume was fairly high. In fact, we've had 3 days in a row of increasing volume, but we also had 3 days of declining prices. So take a look at BP. Would you really want to buy into this? Let's take a look. We've got a gap down here, but let's first try and see if this is a stock that is sensitive to gaps. So let's just take this one here. Let's draw this gap first of all, and let's say that we would look for support and an opportunity to buy BP at 2050. Let's look at other gaps in the past and have they been filled. There's one there. There's one there. There's one here that hasn't been filled. There's a big one here that hasn't been filled. Let's just take a look at this one here and see how BP reacted to filling this gap. It came up here, was unable to fill the gap, but did so the next day, and then because it left a gap, it went back and filled the gap. So see, this gap here within the gap went back and was filled, and then it went back up. So this is a stock that is sensitive to not leaving gaps behind. That means that BP could very well come down tomorrow and test this point right here. We could put a symbol right, if I had $1 million and I wanted to invest or trade in everything, I would probably take a look at this one, and I'd want to put a flag on right there and see if it can get a couple of days support at the top of that gap and the volume to go with it. But you can't look at BP without looking at XOM. And Exxon's chart is very, very similar to BP. So below the 50, hasn't left a gap that needs to be filled. But keep a look at both. Take a look at both of them. They should both move together. APT, you've got this wedge here that's forming, and we've got an alert that if we want to buy this stock, we want to buy it when it breaks out of this wedge. These wedges tend to break in the direction, and the direction is down, so it should break downwards. But we're not interested in shorting it. We're interested in buying it, so we would look at it above this line. TAST, the restaurant company. Let's look at the volume. Still nothing here that says we should be buying this stock. Big volume for these 2 days. So that's encouraging. That's a good sign. This one, not so much, but we stayed above the 50. If you wanted to move into this stock, just give yourself, place an alert right here, and start nibbling when it gets above that point, and then keep adding in increments, wanting to take some off at 590 at the 200. That's if you think that people are going to rush out to Burger King when the stay-at-home orders are lifted. Stay-at-home orders are lifted. And here's Hertz. Really nothing happening with Hertz. In fact, today Hertz said that they were going to lay off 10,000 of their 37,000 employees. That's not a good sign. Hertz is very dependent on people traveling by airline and staying in hotels, and you know that both of those industries are hurting pretty bad. This is a stock that I would want to stay away from. It's sort of like a lottery ticket. If you were to buy it and want to hold on to it for a while, it might be a cheap lottery ticket, but you're going to have to wait a long time. This is a stock that has really underperformed if you look at it on a weekly basis. It's just been going nowhere, and someone who invested in late 2016 just hasn't made any money and is still losing money. So that's one that I would avoid.